Live markets, Bitcoin shrugs off early decline, but 2-month winning streak is in jeopardy. The consensus read is already outdated. What matters now is the second-order effect most commentary still ignores. We will map trigger, incentive shift, and downstream impact before the close. 8 weeks of green. The kind of momentum that makes people forget what volatility even feels like. But here's what changed this week: that streak just went into jeopardy, and the reason matters more than the price action itself. Bitcoin opened this week down nearly 3%. Not catastrophic. But after 2 months of almost uninterrupted gains, even a small decline signals something shifting underneath. The question isn't whether the price dropped, it's why the buying pressure that's carried Bitcoin for 60 days suddenly loosened. Think about what sustains a 2-month rally in crypto. It's not one catalyst. It's a stacking of narratives: institutional inflows, ETF demand, geopolitical uncertainty pushing capital into digital assets, Fed rate expectations cooling. Each of these feeds the next. Momentum builds on momentum. But momentum is fragile. It requires constant reinforcement. The moment one pillar cracks, the others start to wobble. What we're watching right now is that wobble. The early decline this week wasn't driven by a single bad news event. It was driven by profit-taking. After 8 weeks of uninterrupted gains, some investors decided the risk-reward shifted. That's a natural market function. But here's the critical part: if this profit-taking accelerates, it triggers a cascade. Other investors see the breakdown in momentum. They start exiting. The 2-month trend line breaks. Suddenly, the narrative changes from unstoppable rally to momentum trade ending. And that narrative shift is what creates real downside. Let's ground this in what's at stake. Bitcoin's 2-month streak carried the price from roughly 42,000 to approaching 70,000 at its peak. That's a 67% gain in 2 months. Retail investors, institutions, day traders, all of them got comfortable with that trajectory. They positioned their portfolios assuming it continues. The moment the trend breaks, those positions flip from convex to concave. Risk management kicks in. Stops get hit. More selling follows. Here's the second-order effect nobody's discussing yet: Bitcoin's correlation with tech stocks and growth equities. For the past month, Bitcoin rallied while the broader market struggled with rate expectations. That decoupling was the key to Bitcoin's momentum. But if Bitcoin's decline accelerates, it might actually signal something about growth asset risk appetite in general. It could be a warning that institutional money isn't as risk-on as the surface narrative suggests. That ripples outward. Now, here's the contrarian angle. 2-month rallies don't die in 1 week. Bitcoin's early decline was shrugged off relatively quickly. The price stabilized. Buyers still showed up. That suggests the underlying institutional demand is still there. What we're probably watching is not a trend reversal, but a consolidation. A pause. Markets need pauses. Trends that go vertical for 2 months typically cool off before they continue. So the real risk isn't the streak ending forever, it's the narrative changing from, by every dip, to, wait for setup. That changes behavior. Slightly fewer buyers. Slightly more sellers. It changes the texture of the market. What to monitor over the next 72 hours: first, where does Bitcoin hold after the decline? Support levels matter. If it stabilizes around 65,000, the 2-month trend line stays intact. Buyers can argue the dip is an entry point. But if it breaks below that, the narrative shifts. Second, watch institutional flows. Bitcoin ETF inflows are the oxygen for this rally. If we see outflows this week, that's a signal that even big money is taking chips off the table. Third, watch Fed communication. The entire rally was built partly on expectations that interest rates stay lower for longer. If Fed speakers this week suggest a more hawkish stance, that narrative collapses. Bitcoin gets weak. Here's what actually matters for your portfolio: the 2-month winning streak ending doesn't mean a bear market is coming. Markets don't work that way. What it means is that the easy money in Bitcoin might already be made. Future gains still exist, but they'll come from a different foundation, cleaner positioning, institutional accumulation at lower levels, or new catalysts. Not from the same momentum that powered the last 8 weeks. Momentum is a short-term force. Trends are long-term forces. We're about to see which one was actually driving this rally. That distinction determines whether the next few weeks feel like a healthy consolidation or the beginning of a serious breakdown. Keep watching. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next.